Okay, so you're here ready for another deep dive. And this time we're going to tackle something that's been on a lot of people's minds, the Thai economy and more specifically, its stock market.
Yeah, it's a bit of a roller coaster ride, let's be
It
honest.
is. And to guide us through all of this, we have some fantastic insights from Kun Banyang Pongpanich. He's a real veteran in the Thai capital market, 47 years of experience.
That's right. And we pulled out some key points from his interview on Money Chat Thailand.
Yeah, a great interview, really insightful. And what we want to do today is go beyond just the headlines, right? Because anyone can read a quick news article.
Exactly. We're going deep today to understand what's truly driving Thailand's economic health and why the stock market is behaving the way it is.
And to kind of kick things off with a bit of a wake-up call, Thailand doesn't rank in the top 50 of any major global indices.
That's right. You heard that correctly. Not a single one.
And it's actually been declining in these indices over the last 20 years, so that's a big concern.
Definitely something to pay attention to.
So where do we even begin to unpack this?
Well, Ku Young starts by pointing out something really crucial, the Thai stock market.
Mm.
It's a pretty good reflection of the broader economic picture, isn't it?
Yeah, makes sense.
He even uses the example of the 1997 crisis. Remember that?
Oh, yeah.
He says the stock market actually declined sharply before the full-blown economic crisis hit.
So it's like a canary in a coal mine.
Yeah, you could say that an early warning system.
Exactly. So
Yeah.
let's talk about the current state of the Thai stock market and what's really moving it.
All right, so Kun Young breaks down the players in the market, and it's pretty interesting.
Okay, lay it on me.
So you've got your foreign investors, right, the big international players.
Got it.
Then you have Thai institutional investors, like your big insurance companies and pension funds.
Makes sense. And then,
And you have individual investors, just regular folks like you and me.
right. And how have those proportions been shifting?
That's the really interesting part. There's been a huge change in foreign investor holdings over the past decade. Get this, they've gone from 65% down to just 38%.
Wow, that's a huge drop.
Yeah. Yeah, and that translates to a massive outflow of about 4 trillion baht.
4 trillion with a T.
Yeah, with a T. And when that much money leaves the market, it puts a lot of downward pressure on stock prices.
Makes sense. So what about the Thai institutional investors? Have they been picking up the slack?
Well, they have been growing, but not enough to fully make up for that foreign outflow.
I see.
And then within the individual investors, you've got different types.
Oh, yeah, like what?
You've got your long-term fundamental investors. They're looking for value. They're in it for the long haul.
The Warren Buffetts of Thailand.
Haha, exactly.
Hmm.
Then you've got your, well, let's just say big players, or as Kun Banyon calls them, manipulators.
Oh, this is a little shady.
Yeah, maybe a bit. And then you have the retail investors, though the average person often focused on quick gains.
Got it. So a real mix of motivations and strategies.
Exactly. And understanding that mix is key to understanding the market.
So let's take a step back and look at this whole rise and fall of foreign investment in Thailand.
Okay, so picture this. It's the late 1980s. Globalization is kicking in,
Yeah.
and the world is starting to discover what they call emerging markets.
Emerging markets, the new frontier.
Exactly. And Thailand is right there attracting a lot of foreign investment.
And it wasn't just the money.
Well,
Yeah.
Kun Banyong stresses this foreign capital brought knowledge, better management standards, a real focus on good governance,
Yeah.
doing things by the book.
Right. So a real boost for Thailand's corporate landscape.
Absolutely. And this was a time of global economic boom, too. 1985 to 2010, the world was growing, and emerging markets were growing even faster, double the rate of developed countries.
Wow. So Thailand was really riding that wave.
Yeah, but then the 1997 crisis hit. Things changed.
Right. The Asian financial crisis.
Yeah, Thailand's growth slowed down quite a bit, and, investors, they look for the best opportunities, right?
Of course.
So compared to other faster-growing nations, Thailand started to lose its shine a bit.
Makes sense. So the stock market kind of mirrored this whole journey, right?
Exactly. You had that big boom in the early to mid-90s. Remember the market peaked around 1700?
Wow.
Then crash bang, the crisis hits, and a slow recovery.
Ouch.
Yeah, there was a nice jump with the PTT IPO in 2001.
The big oil and gas company.
That's the one. But the underlying issue of slower growth, it kind of kept a lid on investor enthusiasm.
Right. So what about today? What's keeping foreign investors away now?
Okay, so Kun Banyong shared a survey by Kianik Venture Securities. They talked to some major institutional investors, and there are 4 big concerns that came up.
Okay, hit me.
Number 1, fundamental economic decline. So sluggish growth companies not really performing as well. Profitability metrics like ROA and ROE are down.
ROA and ROE for those of us who don't speak finance.
Return on assets and return on equity, basically how effectively companies are using their resources and investments to generate profits.
Got it. And if those are down, it's a bad sign.
Yeah, investors want to see growth and strong returns.
Okay, what's the next concern?
Political instability.
Mhm.
And Kuhn Ban Young makes a good point. Just having a government doesn't equal stability.
Right, you need predictability, consistent policies.
Exactly. Investors need to feel confident that the rules of the game won't suddenly change.
Okay, makes sense. Next.
Governance issues in listed companies, problems with how companies are run.
Right, transparency, accountability, all that.
Exactly. And Kuhn Ban Young says there's been a slow response to addressing these problems.
He gave some examples, right?
Yeah, the Maystock case, Star Corp. There was even an incident where a listed company used funds to help out a related entity.
Oh, that's a big no-no conflict of interest, much.
Huge conflict of
Yeah.
interest, and it led to a massive loss in market value.
So investors are like, no thanks.
Exactly. They lose trust and they take their money elsewhere.
Okay, and the final concern?
Unfriendly government policies, or even the fear of them.
Right, even the possibility can spook investors.
Exactly. Kuhn Ban Young gave some examples. The potential for energy price controls, which would impact energy company stocks.
Right.
Then there's the talk of preferential treatment for certain private entities, which could hurt airport stocks.
Interesting.
And the lack of clarity regarding proposed debt buyback schemes, all of this creates uncertainty, and investors hate uncertainty.
Yeah, it's like trying to invest in a fog.
Exactly. You can't see where you're going.
And it's not just foreign investors getting spooked, right?
No. Kuhn Ban Young points out that even Thai investors who have the means are increasingly investing overseas.
Really? So they're seeing better opportunities elsewhere.
Yeah, the grass is always greener, right?
I guess so. And there's that whole debate about taxing overseas investment income.
Right, a tricky one.
Mm.
You want to generate revenue for the government, but you don't want to discourage Thais from investing globally.
It's a balancing act.
Kuhn Ban Young stresses the importance of being competitive,
Yeah.
not scaring away capital.
And there were those parliamentary discussions about tax avoidance and evasion.
Yeah, Kuhn Ban Young was clear, though. He supports legal tax minimization,
Yeah.
staying within the law.
Right, paying what you owe, but not a penny more. Now let's switch gears a bit and talk about something that often causes confusion and even suspicion among investors: program trading and high-frequency trading.
Yeah, I know a lot of retail investors think it's rigged against them.
Right, like the big guys have an unfair advantage.
Kuhn Ban Young actually makes a good point about program trading. He says it actually contributes a lot to market liquidity.
Liquidity meaning?
How easily you can buy or sell a stock without affecting the price too much.
Ah, I see.
So program trading accounts for about 40% of trading volume in Thailand,
Wow, that's a lot.
even higher in developed markets.
Mm-hmm.
And he explains that it helps with something called arbitrage.
Arbitrage, that sounds complicated.
It is,
So
but basically it's about exploiting price differences for the same asset in different markets.
So like buying low in one place and selling high in another?
Exactly. And program trading, because it's so fast, it helps to close those gaps quickly, making the market more efficient.
Interesting. So it's not all bad.
No. And Kuhn Ban Young cautions against this idea of just banning technology to create some kind of forced equality.
Right, technology is here to stay.
He says it would actually harm the development and competitiveness of the market.
Makes sense. You can't really put the genie back in the bottle.
Exactly. And when it comes to the downward pressure on the market, he says it's not really short selling or program trading that's the main culprit.
So what is it then?
It's the big sell-off, the long sell-off, he calls it. And that $4 trillion bad outflow from foreign investors, that's the real evidence.
Right, they're voting with their feet.
Exactly. And he even says that short selling can be beneficial in some ways.
Really? How so?
Well, it allows for the creation of things like derivative products and structured products,
Okay, and those are...
complex financial instruments, but they can give investors more options and potentially even lower the cost of capital for businesses.
So it's all about balance, right?
Yeah.
Understanding the nuances.
So it seems like the real focus needs to be on addressing those fundamental issues that are driving that big sell-off.
Absolutely. And Kuhn Ban Young is very clear about this. Thailand needs urgent structural reform. And he's not talking about a quick fix, right?
No. He says there's no magic bullet. This requires fundamental long-term change. And he highlights two key areas where Thailand is falling behind: competitiveness and productivity.
Yeah, we hear those words a lot, but what do they actually mean for Thailand?
Okay, so competitiveness basically means Can Thailand keep up with other countries in attracting investment and producing goods and services that the world wants?
Right, competing on a global stage.
Exactly. And productivity, it's all about efficiency. How much output can you get from your inputs, whether it's capital labor land or technology?
Okay, I'm following.
And Kohn Banyang says Thailand hasn't seen significant improvements in productivity across the board.
Compared to,
Well, he specifically mentions the agricultural sector compared to countries like Vietnam. They've made huge strides in agricultural efficiency.
so Thailand is falling behind.
Yeah, and that slower growth rate over the past 2 decades, it's a symptom of these underlying problems.
So let's talk about something that always stirs up a lot of debate. Foreign direct investment, FDI. Is it good or bad for Thailand?
Oh yeah, that's a complex one. Kun Banyang acknowledges the concerns. Local businesses might struggle to compete with foreign companies that have more resources, lower costs, more advanced technology.
Right, and there's always the worry about profits leaving the country.
Exactly. But he also presents a counterargument. FDI can boost productivity, contribute to GDP, utilize domestic resources, bring in valuable technology and knowledge transfer.
Right, so it's not all doom and gloom.
And ultimately, consumers often benefit from lower prices and more choices.
Okay, so there are two sides to the coin.
He even uses a great example to illustrate some of the inefficiencies that can exist, the big gap between lending and deposit interest rates in Thailand.
What does that have to do with FDI?
Well, he argues that this gap is partly due to a lack of long-term liberalization in the financial sector. Not enough competition.
Interesting.
And the fact that many Thai bank stocks are trading below their book value, it suggests an inefficient allocation of resources.
So it all comes back to those structural issues.
Yeah, exactly. And he links this back to inefficiencies in governance and the legal system. He specifically mentions mortgage and bankruptcy laws.
Which can make things more expensive and risky for businesses.
Right. And that ultimately hinders economic growth and investment.
Okay, so this brings us to what Kuhn Banyang identifies as the core of the problem, Thailand's institutional structure.
It might sound a bit abstract, but it's
Yeah.
really the foundation of everything.
Okay, help me understand this.
So think of it like this. Strong institutions are like the rules of the game, right? They need to be fair, transparent, and consistently applied.
Right, so everyone knows what to expect and there's a level playing field.
Exactly. And Kuhn Banyang's thinking here aligns with the work of Professor Daron Acemoglu. He talks about inclusive versus exclusive institutions.
Inclusive versus exclusive, what's the difference?
So inclusive institutions, they create opportunities for everyone. They promote broad-based participation and development.
While exclusive institutions.
They concentrate power and benefits in the hands of a select few.
Got it. And which one does Thailand have?
Well, Kuhn Banyang points to 8 key international indices as measures of institutional strength.
Okay, what are they?
First, you have your goals.
Yeah.
What are we trying to achieve as a society?
Right.
So there's per capita GDP. How much wealth are we generating per person?
Okay.
The Gini coefficient, which measures income inequality.
Right. How evenly is wealth distributed?
And the environmental performance index.
Yeah.
How well are we protecting the environment?
So those are the goals, and what about the pillars that support those goals?
Exactly. So for the structural pillars, you have the democracy index. How democratic is our system?
Got it.
The economic freedom index. How much freedom do individuals and businesses have to operate?
Okay.
The corruption perception index. How corrupt is our society perceived to be?
Right.
Then there's education quality measured by those PSS scores, those international student assessments.
Yeah.
And finally, the rule of law. How well are laws enforced and applied equally to everyone?
So those are the 8 indices.
And here comes the bad news. Thailand doesn't rank in the top 50 of any of them.
Wow, not one.
And what's worse, it's been sliding down in all of them over the past 20 years.
So it's going in the wrong direction.
Yeah, Kuhn Banyang gives some specific examples, like the corruption perception index we've fallen in the rankings, meaning we're perceived as more corrupt.
Not good.
Also, the democracy index has declined, indicating a weakening of democratic institutions.
That's concerning.
And the rule of law, based on the World Justice Project, it's also deteriorated.
So a pretty bleak picture overall.
Yeah, but Kuhn Banyang does offer a sliver of not entirely bad news.
Okay, I'll take it.
We still rank better than North Korea, Myanmar, and Cambodia in these indices.
So at least there's that.
But the key takeaway is there's huge room for improvement in all of these areas.
Right. And how do we start making those improvements?
Well, he highlights one potentially positive step, the current government's move towards joining the OECD.
The OECD, what's that?
The Organization for Economic Cooperation and Development. It's like a club of mostly developed countries with high standards. And if Thailand joins, it could provide a framework for adopting better institutional practices and getting assistance.
So it's a long-term process, but a step in the right direction.
Exactly.
Now, all this talk about reform raises a tough question. What about the people who might get left behind in this process?
It's a valid concern, and Kuhn Banyang stresses the importance of defining what we mean by disadvantaged.
Right, because there are different types of disadvantage.
Exactly. Are we talking about a lack of basic rights and opportunities, or are we talking about a lack of specific skills or investment in certain areas?
Yeah, you need the right solutions for the right problems.
He also warns against holding back progress in the name of some kind of forced equality.
Like, what do you mean?
Well, he gives this analogy of banning computers or AI
Yeah.
just because some people might not have the skills to use them.
Right, but that would hurt everyone in the long run.
Exactly. He says you empower those who are disadvantaged. You don't hold everyone else back.
Makes sense. So who needs to lead this charge for change?
Well, Kuhn Banyang makes a distinction between two types of structure, institutional structure and industrial structure.
Just write that down for me.
So institutional structure, those are the fundamental rules of the game. The legal system, property rights, democracy.
Got it. And industrial structure.
That's more about the specific industries and sectors that make up the economy, manufacturing, tourism, agriculture.
Okay, so different areas, but
Right.
both important.
And the government's role in each is different, right? For industrial shifts, they might build infrastructure, provide incentives.
But for institutional reform.
That's about changing the rules,
Hmm.
changing the laws, creating a level playing field.
And Kun Ban seems to be saying that institutional reform is the key.
Absolutely fix the foundation and everything else will follow.
Makes sense. So what needs to change specifically?
Well, he raises serious concerns about the rule of law in Thailand. He sees it declining.
Declining in what way?
The quality of legislation enforcement, the independence of the judiciary.
Right. So are laws fair? Are they enforced consistently? Can people trust the courts?
Exactly. And he points to some high-profile cases that have eroded public trust.
Right.
There were those allegations involving a major global company and a former Chief Justice of the Supreme Court.
Yeah, I remember that.
That kind of thing really shake people's faith in the system.
Absolutely.
And then there's the problem of too many laws, too much complexity.
Bureaucracy gone wild.
Basically, it creates a huge burden for businesses. It fuels this massive bureaucracy, and it creates opportunities for corruption.
So less is more.
Definitely Kuhn Banyang advocates for a smaller state, privatizing state enterprises.
So getting the government out of businesses that the private sector can run more efficiently.
Exactly.
Yeah.
But he acknowledges that this is a tough sell. You know, there are often nationalistic sentiments attached to state-owned enterprises.
Right. People see them as national treasures.
But he used the example of Thai Airways. You know, they were on the brink of bankruptcy,
Right.
and then they brought in private sector management and turned things around.
So it can be done?
It can. And he worries about any moves back towards greater state control.
Okay, so we've talked a lot about the need for reform, but it's a huge task. Who's going to do it?
That's the million-dollar question, isn't it?
Mm-hmm.
Kuhn Banyang does highlight one ongoing initiative that he thinks deserves more attention: the regulatory guillotine.
The what?
The regulatory guillotine, basically, it's about identifying and eliminating unnecessary laws and regulations.
Oh, so cutting through the red tape.
Exactly. He says this needs to be accelerated and prioritized, and he uses the example of South Korea. They did something similar very successfully.
So it can be done.
It can, but it takes political will. And he says that comes from public pressure. You know, people need to demand change.
Right, make it an election issue.
Exactly.
Now, we've talked a lot about the long-term picture, but what about the short term? Is there any relief in sight?
Well, Kuhn Banyang is realistic. He says, don't expect miracles overnight. Real change takes time. But he says clear, positive signals from the government can make a difference in terms of market sentiment.
Like what kind of signals?
Well, he mentions that regulatory guillotine, again, that's something concrete that shows they're serious about reform.
Okay. And what should they avoid doing?
He cautions against unsustainable quick fixes, like excessive borrowing or those cash handout schemes.
Right. Those don't really address the underlying problems.
And he specifically mentions the digital wallet scheme. Remember that?
Oh, yeah. It was supposed to boost the economy, but
We didn't really have the impact they hoped for.
okay. So no quick fixes.
No. And he also advises against trying to manipulate the stock market directly. You know, things like artificially propping up prices or targeting program trading and short selling.
Right, because those are just band-aids.
Exactly. Focus on the fundamentals, he says.
Right.
Economic improvement, political stability, and less unnecessary intervention.
Got it. So looking at the bigger picture, there's this worry about Thailand becoming irrelevant on the global stage.
Yeah, That's a real concern, and Kun Banyam connects it directly to the need for reform.
So if we don't change, we'll get left behind.
Basically, he even references that book, Why Nations Fail. It talks about how societies can decline if they don't adapt.
That's a sobering thought.
It is, but he also reassures us, we're not a failed state yet.
Oh, okay. So there's still hope.
He says change needs to be gradual, evolutionary, not revolutionary.
Right. No need for drastic upheaval.
He specifically cautions younger generations against the allure of violent revolution. The Arab Spring is a good example of how that can go wrong.
Right. The road to hell is paved with good intentions.
Exactly.
So what's the path forward then?
He says we need to evolve our democracy. He thinks the current constitution might be holding us back.
Really? In what way?
Well, he mentions things like the 20-year national strategy and reform plans.
Okay.
They're too rigid, he says.
So not enough flexibility to adapt to changing circumstances.
Right, and he suggests starting with something concrete, get rid of ineffective laws, simplify things.
Sounds like a good place to start.
He even contrasts Thailand with Malaysia. They have a more flexible approach, he says.
Interesting. Okay, so to wrap things up, Kun Benyong offers his perspective on the capital market. What's its purpose?
He calls it the central hub for resource mobilization and allocation.
Mm,
It's where money flows to its most productive uses, in theory.
in theory, right.
Right, and he lays out 5 key conditions for a healthy capital market.
All right, let's hear him.
First, sufficient resource mobilization.
Mm,
You need to attract enough capital, both domestic and foreign.
makes sense.
Second, a competitive cost of capital.
Okay.
Interest rates need to be reasonable.
Right.
Third, efficient and equitable allocation, so the money goes to the right places and it's not all going to a select few.
Okay.
Fourth, effective monitoring. You need transparency and accountability to make sure those investments are being used properly.
Right. No funny business.
And finally, a mechanism for reallocation of failed resources.
Yeah.
When things go wrong, there needs to be a way to restructure or liquidate.
Like bankruptcy proceedings.
Exactly. So those are the 5 conditions, and he ties them back to some key elements within the market itself.
Okay, like,
You need a diverse range of investors, high-quality research, strong governance practices, and enough liquidity for smooth trading.
so a well-functioning ecosystem.
Exactly.
And what's the ultimate message Kun Banyang wants to leave us with?
He emphasizes the importance of seeing the bigger picture, how individual benefit, customer benefit, societal benefit, and the health of the system are all interconnected.
Right, it's not just about me.
And he sees this whole deep dive as an effort to empower investors like you with knowledge to reduce fear and encourage informed long-term investment.
Right, because knowledge is power.
He also wants to make it clear that we haven't just been complaining. We've actually identified some concrete pathways for reform.
So a call to action.
Definitely. And finally, he expresses his gratitude to Kun Banyong for sharing his insights.
Yeah, a big thank you to Kun Banyang.
And now for our final thought, considering all of the reforms we've discussed. Which one do you think would have the biggest positive impact on Thailand's future?
That's a great question to ponder. It's not an easy one, but it's worth thinking about. So there you have it, a deep dive into the Thai economy and stock market with insights from a true expert.
We've covered a lot of ground.
We have, but hopefully this has given you a better understanding of the challenges and the potential solutions.
And maybe even some hope for the future.
Because despite all the problems, Thailand has a lot going for it.
Absolutely. And with the right reforms, it can reclaim its place as a leading economy in Southeast Asia.
And beyond.
So until next time, keep learning, keep asking questions, and keep investing in your knowledge.
And in Thailand's future.
Exactly.
See you next time.